So how exactly did COVID-19 affect the Australian housing market? And we're going to look at my predictions that I made a year ago and exactly how that's played out with some data that's just been released. So keep watching. Hey guys, my name is Ravi Sharma and Happy New Year. Wow, this is the first video of 2021 that I'm releasing here on Search Property TV. If you're new here, smash that subscribe button. This year is our year. It's your year. We're gonna take financial freedom, financial goals and wealth goals so seriously this year, we're gonna smash it. So just like you're gonna smash the like button because the YouTube algorithm then can push this video out to the people that really need it. And of course, I'd love to hear what you predict the housing market will grow by or fall by in 2021 in a comment down below. Now guys, before I jump into this video, I am super excited to let you know the pre-launch offer is still available on my online course, Confusion to Clarity. Guys, this is a complete guide, step by step, of everything you need to know when starting out in Australian real estate. This is targeted at even first home buyers or people that are investing for the first time in an investment property. Guys, this offer is not going to last long. Without trying to sound so salesy, I really urge you to take advantage. Just think about all the exclusive content, more than 3 hours worth in a complete guide. You can download the syllabus. There's a link in the description below. Take advantage of getting ahead and getting self-education because 2021 is going to be massive for Australian real estate. So in today's video, I really wanted to focus on a couple of things. One, I had made some predictions in April of last year. So when COVID restrictions had just come in, I wanted to give some clarity around what my predictions were as to what would happen to Australian property and to the housing market in general, and how I have actually fared in terms of what I predicted would happen and what is actually happened. So I'm going to put some data up, but I'm also going to take some clips out of that video because it is a 45-minute video that I released in April. And if you haven't checked it out, you should definitely check it out. There's so much value. Honestly, that when I'm looking back at that video, there is so much value there. It's like a mentoring session 101. So if you really want some context, definitely go check it out. But I want to break down a few points that I made, but the overarching prediction that I made, I'm going to insert the clip right now so you can see exactly what I thought would happen in April and how that's fared out. I would be very surprised if I was seeing in the affordable market in the suburbs I am looking at that have such good growth fundamentals that we are going to see a decrease in price by more than 5%. Okay, so this is what I foresee happening. Over the next 2 to 3 months, we may see a 5% drop. But as soon as one of two things happens, one, the virus is under control. We are flattening the curve already, right? So if we are able to manage it a lot better, we are then put into a position where we can get through the lockdowns. Suddenly businesses start operating, people are back to everyday life. And in Australia, we may be okay, right? I still foresee a recession definitely on the cards. I'm now questioning whether we'll go through a depression. So recession is 2 negative quarters of negative growth, and a depression is 4, okay? So we go through, and this is what I expect will happen. We either see lockdowns decrease and a virus vaccine is announced. As soon as we know these things, the certainty and confidence comes back into the market. And what we are going to see is we're going to see this go and sort of flatten out, because in this period here, right, in this period here, everyone is unsure. Right now, people who own houses, they're not selling because they're just deferring payments. People who are looking to buy are scared, like yourselves. You've probably got cash, but you're like, no, I want to wait because I read that markets will come down. We're going to address this big concern right now. If you are waiting for this market to capitulate, if you're waiting for this market to just drop by 20%, the property market will not do that. If that's all you came here to watch, you can leave now. But essentially you need to know cause and effect. There is credibility in what I am saying here because I understand how macroeconomics works. So in this period, you may actually have 2 properties go on sale in a suburb, right? It's an example. So you may have 2 properties in a suburb go on sale where traditionally we had 5 or 6 in that period. So what that means is, as buyers have decreased, we're also seeing a lot less houses go on sale. So if there was 4 people after 2 houses, well, what's gonna happen? You've got more demand for the supply, which means in that market, the prices will go up. But if you flip it around and there's 4 people wanting to buy 8 houses, well, now they've got choice. So now they're gonna go, hey, 4 people are gonna go, I wanna put an offer here and I wanna put an offer here, and I don't really care who takes it because the vendor has no choice, right? It's a buyer's market. That's what you call is a buyer's market. Right now is a renter's market. And just with the announcement of Airbnbs becoming illegal in New South Wales, you've got all these properties coming back into the market, which means if you're renting currently, you could pretty much get a lower rent. For people who haven't started renting, they could go out there and find properties listed, but you could ask for a negotiation, you could ask for a reduction. So it is a renter's market, okay? So we're gonna see this period, and I expect that it's gonna be about 2 or 3 months of this uncertainty. We're already seeing positive news with the coronavirus in terms of how we're dealing with it as a country. And then you're gonna see an absolute growth period that we've never seen before. Now, I say this not because I'm in the property market, but because I understand how it works. Now, let me explain why this will happen. There's a few factors that you need to consider, okay? Normally, what happens is, say, for instance, the GFC or any other economic disaster, you would have the recession period would start from here and it would end here, okay? What would happen is as soon as we get to about here, we're gonna announce stimulus. And then we're gonna get to here, and we're gonna go stimulus. And we're gonna go here, and then we're gonna go stimulus. Okay? So stimulus is just government sort of giving you money, they're printing money, they're buying up government bonds. There's a lot of ways that they can do this. It's called quantitative easing. That's what they're doing right now. So what they'll do is they'll go, let's pump the economy. So they'll go, hey guys, here's $1,000. It was like when Kevin Rudd did it, right? Everyone got some money. And then what they expect you to do is then use the money, circulate that by buying a new TV, buying a camera, going on holidays. Now, in this case, you can't go on holidays. But what's more important here is during the GFC, we spent about, I think it was 100 billion, okay? During the whole GFC. We are currently, we're in April, we haven't even seen a quarter of negative growth yet, right? I think the numbers may have come out, not sure what they look like, but what's important here is we haven't even seen the recession. We haven't had 2 consecutive quarters of negative growth, so we haven't seen the recession yet. We have spent over 300 billion and we haven't even seen the recession. This is why I'm saying, if you haven't watched my market updates, you need to understand what I'm saying here. Guys, if we spent 100 in the entire GFC to get us out of the recession, we're at 300 billion before going into recession, and they're trying to tell you that it's because we're trying to keep people in jobs. It's a load of shit. What they are trying to do is they're devaluing our money. The amount that we can have in terms of buying power with that dollar is a lot less today than it was 5 years ago, right? So 300 billion, we're here, right? We haven't gone through this period. During this phase, they are gonna pump more and more and more stimulus, right? More money, more government spending, all those projects they had planned, like maybe there's the new rail that's gonna go in a particular area. These regional towns are really gonna have their time to shine now because all those projects they had, they're like, hey, you know what? In the regional areas, the virus is actually not that bad in terms of, community transmissions and stuff. So they bring them forward. Now they're going, let's have these government incentives. Let's have these government projects, have them happen now. People are gonna go to these areas. They've got jobs. People are spending more money because they've got jobs. It's insane. What they are doing right now is insane. And this is why I say, if you have money in your account, if you literally went 5 years ago and spent $20,000, you would buy a shitload more than in 6 months' time, you're $20,000. That's a fact, right? Okay, so those were my predictions. That's what I was thinking. And again, if you haven't checked out the full video, you may want to check that out. It's very, very informative, and I think you could get some real good value out of it. Now, let's see what actually happened. I've got some data here. We're going to deep dive into it just to understand exactly what's happened with COVID-19 and the Australian property market. And then we're going to look at what could potentially happen from here. Over the 12 months of 2020, Australian dwelling values officially increased by about 3%. This concealed divergent performance across regional and metro markets, whereas homes in the 8 capital cities could only grind out a soft 2% capital gain. Regional dwellings increased in value by a solid 6.9%. So guys, all of last year when I was putting up videos, I kept saying, look, regional markets, I've put up a video about best places to invest in 2020. I mentioned regional properties in there. Across my Instagram, I'm saying, look, this is the big move. This is not just a COVID-induced recession. This is not just a COVID-induced migration out. It has been happening for years. And that's why I kept purchasing property regionally. I've got some metro properties, but regional has outperformed capital cities in most occasions across the last 15 to 20 years. So when people are looking at investing, they think, well, I'm just going to stick to what I know. That is fundamentally the reason why most people get it wrong. This is the old way of doing things, and I don't particularly think it works, especially when you look at cash flow as well, when you're looking regionally and in other suburbs outside of the metro cities. There is a life outside of this, guys. There are people living out there, believe it or not, and it actually makes a lot of investing sense. So let's deep dive into state by state, the capital cities and how they've performed across the year for the 12 months. And I'm going to share with you my thoughts as to what the difference between what I predicted, what's actually happened, and what my thoughts are. Okay, so the index results as of December 31st, 2020. This is what got released by Corelogic, and you can see in the first line is Sydney, and we're really trying to look here at the total return, and that's the number that we're going to be focusing on, as well as the quarterly growth, because that's usually going to lead us into indicating what is coming. So with Sydney, the total return was a 5.3% return, which is actually fantastic given where the market was at with COVID and restrictions were around. However, take this with a pinch of salt. I think there is a lot here that was based on inner city suburbs where the performance was actually really good in terms of housing and more terraces and houses there. Obviously, units capitulated really that year. Melbourne, 1.9% as the total return. Again, their quarter return looks like 1.5%. It seems like that recovery is really coming through now post the restrictions that they had. They had the most extended restrictions. And so now we come to Brisbane, that got 7.6% as the total return. In the quarter, it's 2.1%. So it's a really good performing market. But what I had suggested last year in my best places to buy was Adelaide, and look at the return there, 10.1%, and quarterly 3.6%. This market is completely booming. It's exactly what I was saying, I would say now 6 to 8 months ago. This is really a market that I think still has a long way to keep going. It will be a really good hotspot to look into for 2021. And then we go into Perth, 6.4%. There is this recovery that's occurring. Again, I think it's with mining, the iron ore prices, but I personally would not still be going into Perth at the moment, but I will have a dedicated video around best places to buy in 2021. Definitely leave a comment down below if you would like to see that. Hobart with a massive 11.4% return. Guys, this was during a recession, and it's incredible to see these numbers. Again, quarter 3.2%. Hobart is completely booming. I think it's towards the end of its cycle. However, take that as you may. Darwin is the next one, 15%. Holy crap. And in the month, 2.3%. I don't really usually look at the month, but that is significant. Canberra is the next one at 12.5%, has performed really strongly for its investors and occupiers, quarter of 3.5%. So that takes our capital combined total to 5.3%. And that is quite good, actually. I didn't expect it to grow as much as it did. However, I think in 2021, we are going to obliterate those numbers. I think it's going to be strong growth. Now, coming to combined regional, 11.8%. Guys, this is what gets me excited. I'm really excited to see this number. I've been very big on regional properties, and a quarter of 4%. Now that takes the whole total to 6.6 nationally. Again, really boosted by the regional performance. Guys, wow. Again, I did suspect that boom would be coming. Obviously, you saw my predictions. It was going to be the biggest growth cycle, and we are right in it. Now, I don't say this because I'm just a buyer's agent. If you can go out there, buy property yourself, you can go there and use other buyer's agents, go and do it. This is a fantastic time to be alive. And I know that there's going to be some haters saying, no, property is going to go down, it's not going to work out. Well, we've just had the biggest health-induced recession in Australia for a very long time, if ever, recorded, and this is the sort of returns we're getting. Now, if you want to take a global perspective on this, have a look at the Canadian market, have a look at the US market. They have significantly grown in value, the UK market as well, and we know that their COVID outbreak and their situation as to how they're handling it has been a lot worse than what we've been doing in Australia. So I'm very happy to see these numbers. I know that these numbers are going to look small. Okay, I know these numbers look massive right now, but these numbers are going to look tiny compared to what is about to come in 2021. Guys, my next video is going to be around my predictions around what will happen this year. And I really urge you to subscribe to the channel. There's been amazing support already, and I know that you're taking a lot of the content from this channel and using it in your own lives, executing, and I'm really proud of you. I really hope that you guys are gonna smash this year. I am so eager to bring out more content to you guys regularly. So if you haven't already, smash that bright red button saying subscribe. Also hit the bell icon because that definitely helps the channel grow, but it also means that you can really just get on top of watching these videos before everyone else can. There's going to be amazing value coming on this channel. If you want more, there is a private Facebook group, definitely join that. There's a link in the description below. If you want to take your financial education seriously, guys, I talk about on this channel a lot of stuff, housing market, the economy. I don't talk about specifics of how to get into property and going from start to finish, exactly what steps are involved, how to know which loan products to choose, goal setting, creating your own strategy. I basically talk about everything you need to know in terms of metrics to look for when you're searching for your own properties. This is the Australian real estate online course. You need to get on it, not just because I created it. I feel like there's nothing else out there, and I've really put in a lot of effort. Thank you so much to the support already. Almost 100 students already enrolled, which is awesome. You definitely need to take advantage of it. There's a link in the description below. Definitely get it. Confusion to Clarity course. It's going to blow your mind as to what you could learn about it, and is the best stepping stone for anyone out there wondering, how do I start in 2021? That is it. So guys, thank you so much for watching. This is the first video of many to come on the channel. 2021 is going to be awesome. I'm sending my positive energy through to you guys. I really appreciate you being here, and I can't wait for a stellar year. I'll catch you guys in the next video. Thanks guys.